Hi guys, my name is Matiss. I'm the co-founder and CEO of Creamfinance. The title of my presentation today is Smart Data, Simple Loans. And the reason for this title is because it explains very well what we do in Creamfinance, which is consumer lending. And let me just skip right to it. So our mission in Creamfinance is to make money available. And we do that by providing consumer loans online, non-secured consumer loans online. We're not a peer-to-peer platform, so we lend our own capital from our own pocket. Yeah? Basically, it's all about convenience. It's all fully online. You can borrow anywhere from a few hundred euros for a few months, all the way up to a few thousand euros for a few years and everything in between, right? You go to our website, it takes literally minutes to apply for a loan, and you can get the money to your account within minutes from applying for the loan, right? There's three things that we focus on very much and believe in when it comes to consumer lending. Number one is that convenience is the most important thing. So we want to make borrowing money online as simple as clicking one click, a bit like Amazon one-click checkout. The second thing is we use what we call smart data to process and verify our clients. And there's this popular notion lately of big data, maybe some of you have heard of it, which is concerned with gathering a lot of data and analyzing it very automatically. The problem with big data is that it costs a lot of money to do, while smart data is more focused on data that's easily available and it can extract quickly. And I will make more sense of it as I go through the slides. So, and the third point is that we believe in a focused product and global presence. What it means is, for those that are familiar with the fintech space or financial technology space, there are a lot of disruptor banks, a lot of challenger banks, and Amazon of financial services, and all these different interesting companies, but they're not really making money. What we want to do is we want to provide only one specific product, which is non-consumer, non-secured consumer loan, but we want to do it on a global scale, all around the world. So let me show you where we kind of are as a company overall. So we started in 2012 in a country called Latvia, which is part of the Baltic states. That's where I'm from. Now we operate in 8 countries around the world. So we have offices primarily and mostly in Europe, but also, as you see, in Mexico, where we launched in November of last year. We have 300 people across these different offices. Our central office is in Warsaw, which is Poland. We are making over 30 million euros in revenue, and we're profitable. So that's very important to point out. And we've raised something like over 50 million euros in various forms of capital so far. So these are the kind of points that we're happy about. The reason that we were able to grow but also maintain good level and healthy level of profit is because our default rates in our company, and by default, it's the proportion of clients that don't return money to us on time or at all. It's very controlled and maintained at a very low level of 4 to 6% versus the industry average of approximately 10%. So that gives us very strong profitability. And the reason why we've been able to get very strong default levels, approaching the banking default levels that large high street banks are achieving, the reason for this has been our obsession with building the best, what we think is one of the industry's best credit risk management models. And specifically, not only the scoring or how do you underwrite a loan to a consumer, but also how do you collect it and how do you service clients and how you keep this value chain in-house. So briefly, I'll talk about those 2 points. So number one is we use what we call automated scoring, whereby it's a very data-intensive approach to underwriting. So we see everything from the device that the client is using to apply for a loan with us on our website. We see everything that the client is doing on the website, including how they move the mouse, how long they read the contract, what is the age of, or how old is their email address. And that's just the tip of the iceberg. We also combine this data with more traditional credit bureau checks, and we put it all into machine learning algorithms, which is basically data science, to come up with projected probabilities of default of every single client. So before they have repaid us money, we already know what are the chances that they will either default on a payment or that they will return us money on time. And the job for us is to keep that level of default within a certain corridor and control that corridor as opposed to make it as low as possible, right? And for kind of examples purposes, let's say the focus for our probability of default is around 10 to 15%. Yeah? Now the next part, what we do on the left-hand side is smart collections. What we mean by smart collections is we have built various interesting automatic algorithms in-house. One thing is we've built, which is interesting, which is called automatic voice assistant, which is basically a robot that makes calls to thousands and thousands of clients at the same time. And in that way, we reduce the inefficiencies of people having to manually dial out to clients, wait, and then get rejected, etc. So that's just one of the things we do in smart collections. Now, if you take smart collections, they allow us to reduce our default level that I mentioned, which is about, let's say, 10 to 15% kind of corridor, down by at least a half. And that's where the real magic comes in. So we end up with a real default level of not 10 to 15%, because that would be very high, but more like 4, 5, 6%. Yeah? And the trick is that if you would look at companies that is in our space, to give you more context, mostly consumer lenders are great with one side of this credit risk management spectrum or the other. There are companies like Vonga, which used to be a superstar, rising fintech business in London and in Europe. They were great with the automatic scoring, but they were super terrible when it comes to having great client processing capabilities and collections and customer handling, right? Now then there are companies like, for example, in the UK, Provident Financial, very strong company, but it's very offline, right? It's very focused on collections. It's very much door to door. So they have little focus on the data science part of this equation, right? So what we try to do is bring, kind of the best of the two worlds. Why is it relevant or important? This is a chart where you can see our lending volumes over time, over a few years. Those are the blue bars, right? So we're lending more and more. Now the red bar, as you see, the red line shows you the industry average default rate, which is approximately 10%, and our default level of approximately 4 to 6%, which is the blue line. So we're doing something that really makes sense and that helps us be very profitable while growing our issued principal. And the last piece that I want to leave you with is why this might be interesting for you is our bond offering. So in order for you to somehow participate in our story, last year we issued a bond offer on the Warsaw Stock Exchange, which was very well received. It was in the amount of approximately 6 million euros. And so because it was so oversubscribed and investors liked the instrument, we want to extend this bond offer this year for additional 10 million euros. So what we're offering is, as you can see from the slides, a coupon of 12%, annual coupon, paid quarterly. The minimum investment is 10,000 euros, and the maturity is 36 months. So it's a 3-year investment whereby we return the principal at the end of the maturity. And then there's some details around our financials. As you see, we're growing. At the moment, last year we made about 30 million euros in revenue, and we're profitable, just to repeat that. And we're continuing to grow primarily due to our IT-driven approach to scientific credit risk management. So this is pretty much what I wanted to share with you today. If you are interested, grab me, or our booth is over there. It's number 16, so you can get more information there. Thank you.